We trade the NBA.com. This is John's report for the 11th of July. Well, we have the week bend of the magenta here from Friday's action to follow through, even though we're getting a slight tip up right now. I still expect that down pivot is still a continuous run right now, even though we got some positives of the blue. White hasn't risen above magenta or yellow yet, and even yellow is still rising. So those are remotely bullish and very close to the 33 level, which is a critical point above that has more strength, but certainly cross below during the day. Would certainly negate all of that and head us lower. The problem is the rejection potentially here of DOC green crossing red. That would indicate weak midterm buyers and potentially the rolling over of longer term ones as well, wanting to just stay out of the action, and that's because of that rising orange. You need to see that DOC orange starting to fade in order to suggest that we're going to see some real strength into this. But currently, minus 20 roughly in the pre-market, and that's the year-to-date roughly of where things stand. NASDAQ had been stronger, but you can see that down pivot from there. Moving back up would create an entirely new pivot. It would be unusual. It doesn't usually occur that way. So definitely keep an eye out for that. But overall, that crossover of steel coming below and orange going above suggests weakness in the NASDAQ. And since the NASDAQ was leading things, it should be likely the one that carries it down. Euro made a nice pop back after reaching parity at the 100. 1.00, 720. Of course, you got to go with those extra digits, but that's about as close as it's been since, almost 20 years, 15 years. Since the Euro's inception, roughly, back in July 15th. Regardless, fading a little bit already. Be impressive if they're able to hold it above par. There's just no justification for it being where it is, given the continued escalation of decline in Germany. They're turning off hot water heaters, limiting the time you can shower, all sorts of strange stuff. And that's likely to spread because, as Putin said, the West is continuing to accelerate. So Nord Stream 1 goes down for supposed maintenance. The question in everyone's mind, will it come back online? And what's the real incentive for the Russians to do it? They don't really need the cash because they have too much of it as it is and can't do anything with it. So, gold continuing to stay weak. Again, I think the prospects for gold longer term are much better. This is just a brief, I want to call it a respite. I think it's just more of a controlled pullback to keep things under wraps, because if gold starts accelerating, it's only going to help drive oil as well, and that's going to be a continuation problem. Ideally, what the Fed is hoping for is a slowdown, but a small slowdown in the economy that will help ease the gasoline needs, and that would drive prices lower. We're already seeing, obviously, improved stock keeping. It's right at the 100 level, but that's still, from an inflationary standpoint, elevated, and obviously at a certain point people get used to the increased price and make the adjustments necessary. It's the initial shocks that are always the roughest, but is this the end of it? Of course, they're talking about that capping Russian oil values for whenever it ships, and those kinds of things really disrupt markets, and when you do that, you don't know what you're going to get, and that's that uncertainty. Of course, TOT falling because Fed is going to stick with its course of raising rates. They don't have any choice. They never did. The question was how slow they could go and the other measures that they could use. And reducing money flow and things like that would just help slow things down as far as inflation goes just a little bit. And obviously the oil situation completely out of their control. So that's just one of those elements that there's nothing you can do about. Bitcoin, again, back to that 20 level. It's just where's the interest at this particular stage? Everything is pretty much getting hammered simply because of the general economic outlook worldwide. So That still makes the U.S. clearly at this particular stage most attractive since it's been the strongest. Or if you're in a different country, the ruble has seen the best appreciation. From an ETH standpoint, again, that's that gap down breakdown just taking us back to the lows and breaking it clears out a whole other range of stops for any, active individuals who got excited about how things were going. And for a 50K, just about a back and forth, that would be a nice clean double top conversion right there. Then the breakdown of magenta right here up at the 39 level. And we can see how that's progressed. Intraday, it was kind of choppy back and forth. We had some nice little runs up, beautiful ones going back down as well. So all in all, that was pretty clean action. Got to the peaks, came all the way back down. And again, my position is that we were less likely to head towards 4,000 before, dropping closer to 35. So it'd be impressive if they're able to do it. There is a lot of money that supposedly needs to come in to the market, and they're going to be finding things what they might consider cheap. It just becomes a relative thing. It's only cheap if the economy continues to grow. If it's stalling or in any way fading, then those multiples don't make sense at this particular range. So there you have it. That's really the ultimate question, and this is what's trying to be decided right now. And it doesn't look all that great, but when you have those job numbers that they report, assuming you can believe those numbers, because this is the problem that we've gotten in with statistics these days. They've so massaged them, so many adjustments and just arbitrary ads for seasonality and things that they're really hard to get a gauge. I always look at labor participation, which is really wretched from a historical viewpoint, because it really gives you the total number of people working versus the number that can be working. That's pretty consistent. The rest of it gets massaged. You haven't worked long enough, they drop you off the rolls, and so it's like the inflation numbers that we're not keeping track the same way we did a couple decades ago, and it's those changes that make it hard for comparability purposes to gauge where things are at. So that's the long and the short of it right now. A little bit of dip, having that return right back above the 23%, and you'll see still looking strong at this particular stage, but getting very close to the positive extremes, which that's pretty frightening, because if we get a positive extreme here just above the 23%, that's going to come back. As always, though, look for me on Skype chat. Trade well. We'll talk to you later.